What's going on, guys? So today we are going to talk on the ICT daily buys. And the thing is, most people are actually messaging me to create a video on it. I got a lot of DMs on simplifying daily buys. So here it is. I would be creating this method in very simple way, and everybody would be understanding it. And we have some of these steps to follow to understand the daily buys. This is not complicated, it's very easy, and you'll be getting to the point, right? So let's go and get into the content. Now, table of content we are going to include in it is are what is internal value liquidity and external value liquidity. It's a simple method to understand where the next round liquidity, right? We'll be simplifying it, and I already have created a video on it. I'll be showing it to you on I button, and I'll be keeping or putting it in the description. You can be easily watching it, and you can be having the deeply analysis on the topic, right? So understanding daily highs and lows, which is also important to know where the next round liquidity, and this is the method you can be simplifying daily buys in easy steps, very easy, right? So let's get into the content and make it simple, right? So now we got the internal value liquidity and external value liquidity introduction. So simply, these two concepts are foundational for building anticipatory skills to read the direction of price and understand where it is most likely to drawing to. One of the first dynamics to understand is that price is always doing one of two things: seeking liquidity behind swing high, low, external value liquidity. Now, any high you see on the chart is simply external value liquidity. Any swing low, any high, any buy side liquidity is external value liquidity. And seeking fair value gap, rebalancing and imbalance, internal value liquidity, which is the fair value gaps. Very simple. Market is simply filling up the internal value liquidity on the high time frames. I would suggest you to look up at the daily chart for understanding it better, or even the high time frames, right? So now we have the introduction, and we'll be going off what is actually internal value liquidity, external value liquidity, right? So external value liquidity is determined by swing highs and lows where pools of liquidity reside, right? After taking external value liquidity, the drawn liquidity shifts to internal value liquidity. Now, if we are taking out the highs, we simply go to fill up the internal value liquidity, which are fair value gaps or imbalances, whatever you call. And now, what is the internal value liquidity? I already told you the imbalances. The fair value gaps are the internal value liquidity, right? After moving into internal value liquidity, the next round on liquidity would be external value liquidity. Always, if you are missing it out, you should be understanding it more simply, right? So this is the chart example. We have the external value liquidity, right? Now we are going to fill up this internal value liquidity. This is our main target, right? We should be understanding the daily buys through this. We have taken out the external range liquidity. Now we are going to fill up the internal range liquidity, right? I already made a video. I'm going to put it on I button. You can be watching it. Very simple. It's not complicated. And now this is how it looks like. External range liquidity has been taken out. Now internal range liquidity has been filled up, and we got another swing low, which is our next round liquidity, right? So if we are going to go, where would we go? Simply external range, internal, and then external range liquidity, right? We are in the direction of high time frame order flow. Now we have the previous daily highs and lows, right? I would be showing you the chart examples on that topic. So simply using previous daily highs and lows, we can be determining the daily buys, right? So a candle body closing behind a previous daily high or low or failing to do so is a function of institutional order flow, where a key level in price is either being respected or disrespected, right? So if we are closing above any previous daily high, we are most likely to go to create another previous daily high. We would be going off only in bullish moves, right? And if we are closing the body closing below previous daily low, it means we are going to now directly into the sell side momentum, right? So we should be keeping that, understand. But if we are taking on the previous daily high and we are rejecting with a wick and shifting a structure in lower time frames, it is most likely go we are going in downtrend to take out the previous daily lows, right? We should be keeping that in our mind, right? It's very simple. Now in a bullish move, a close above previous daily high allow us to deduce the prices printed lower time frame bullish PD rates. On the way up, that it can act as a support for price. While a close below PDH, which is previous daily high, means a market structure shift may have taken place in reverse price, at least in short term, right? It's very easy to understand. Now let's move on to another thing, right? So if the daily candle closes above the previous daily high, we anticipate new previous daily high that the next day will target another previous daily high. It means we are continually moving higher, right? If the daily candle takes the previous daily high but fails to close above it, we expect the next day to reverse back into the range, potentially targeting the new previous daily low. If we get an inside candle and we do not take the previous daily high nor previous daily low, then we do not have much bias. We consider which is the closest, and the current order flow is to simply consolidate, right? We are not going to take any previous daily highs and lows if we are not taking out, right? It means we are simply going into the consolidations, right? So if we are rejecting, it means we are going to take out. If we are rejecting after taking out the previous daily highs, we are going to take out the lows. And if we are not taking out both sides, it means we are going into the consolidations. I'll be giving you the examples, right? Now this is the daily chart, right? GBP USD daily chart. Now we have taken out this old high and we are flipping our buy side momentum into sell side momentum, right? So now we should be marking out the previous daily highs and lows. So this is basically daily chart, right? So simply let's just mark out this candle high and that candle low, right? So simply we'll be marking it out. If we are closing below any of the candle, high or low, we will be looking up at the buys according to it, right? So now high, low. So let's see if candle closer is below this low or above this high. So we have the candle closer below this low, right? So it means our bias has been bearish right now. So now we'll be looking up at the internal range liquidity and external range liquidity, right? So simply this high and this low. So simply we would be taking out this external range liquidity low, right? So now let's see what is going to happen. So we got this candle, right? We have not swept out this low simply, and now let's see, we have another candle. Now if you look up at this three candle pattern, which is the imbalance fair value gap, right? So let's just mark it out. We have this fair value gap, right? So now internal range liquidity to external range liquidity, we should be thinking or keeping this thing in our mind, which is internal range liquidity. Now our focus would be these lows to be taken out. Why? Because internal range liquidity and external range liquidity. Now we have this candle high low, right? We should not be closing above any candle, right? This high, and also we got this high. We should be getting rejections off of these highs, right? If we're getting rejection, then we should be looking up at this low to be taken out, right? So we should not be body closure, right? So we have another candle, also rejection, and now we want to see this low to be swept out, right? Let's see. Okay, we have got rejection, and now we have body closure below these lows, right? So if you see, we have closure, and again we got this what? Internal range liquidity, and then again external range liquidity, right? So let's just mark it out. Internal range liquidity, and we got external range liquidity, right? So we have the clear buys where we want to go, right? So let's just see what is going to happen. We have internal, we have filled it up, and we should not be closing above the candles, right? So let's see, we have closed above that candle, right? It means we'll be most likely to take out previous daily high, right? So we have this high and that low, and we have took it out and closed above it. So if now we are closing above this high, means we are going to go most likely to take out these highs, but we are getting rejection of this high, right? We have body closure, right? But we went up and took out this high. It means if we are closing above the candles, we are most likely to go to take out the another previous really high or low, right? So simple. And let's see what is going to happen. Internal vein liquidity and then external vein liquidity. This is how it works, right?